Hey everyone, welcome back to Corporate Decoder, the place where we break down the complicated world of corporate finance. And let me tell you, this Fossil Group filing is a real fashion show of numbers. Some are looking great, others less so. This filing is essentially a proxy statement. Think of it like an annual report card for the company, but focused on the upcoming shareholder meeting. It tells you what the company wants you to vote on, who is running the show, and how they're spending your money when it comes to their top executives. So Fossil Group Incorporated is getting ready for its 2025 annual meeting. They are asking shareholders to vote on electing 8 directors, giving an advisory vote on executive pay, and approving their accounting firm. Pretty standard stuff for a company of this size. First up, the board of directors. They want to elect 8 people to the board to serve until the 2026 annual meeting. Now, it is interesting to see who is up for re-election and who is not. They mentioned that Eugene I. Davis will not be standing for re-election because a special committee he was on will be dissolved. This is a subtle shift in who is steering the ship. When we look at the directors, people like Pamela B.C. Ori bring a ton of experience in corporate turnarounds. She has spent over 25 years dealing with tough financial situations, and the company specifically mentions she is considered an audit committee financial expert. This is important for keeping the books clean and investors confident. Kevin Mansell is listed as the chairman of the board and brings a wealth of experience from his time as CEO of Kohl's Corporation. Having someone with that kind of retail leadership background at the top is a big deal, especially in the fashion industry where understanding the market is crucial. Now, let's talk about how these directors are compensated. For fiscal year 2024, directors earned significant cash retainers. For example, Mark R. Belger earned a total compensation of $252,050, which includes a base retainer and stock awards. Susie Coulter also pulled in $292,702. These numbers show that the company values the expertise directors bring, and it is a hefty price tag for their guidance. Here is where it gets interesting. We see who actually owns a significant chunk of Fossil Group Incorporated, Costa Kartsotis, who is a former chairman and CEO, owns 2570641 shares, which is 5.5% of the company. This is a good sign when leadership has skin in the game. However, Nantahala Capital Management LLC is the biggest player here, owning a substantial 9.3% of the company's stock. This means outside investors have a big say in what happens. Alright, now for the part everyone really cares about, executive compensation. This is where we see how much the top brass is making, and it can tell us a lot about the company's priorities. The filing lists the named executive officers, or NEOs. Looking at the fiscal 2024 summary compensation table, the numbers are quite eye-opening. Franco Fogliato, the current CEO, had a total compensation of over $4.5 million in 2024. This includes a substantial base salary, a large bonus, and significant stock awards. Costa N. Kartsotis. The former CEO had a total compensation of over $1.1 million in 2024 and over $1.4 million in 2023. Jeffrey N. Boyer, who had a few interim roles, also saw a total compensation of over $1.3 million in 2024. The compensation actually paid versus summary compensation table total is a key metric here. For Mr. Fogliato, the compensation actually paid in 2024 was significantly lower than his reported total compensation. This is because it adjusts for stock awards that were granted but not yet earned or vested, and also accounts for the value of awards that remain outstanding. It gives a more realistic picture of what the executives actually pocketed. This difference highlights the long-term nature of equity compensation. The company explains that a big part of executive pay is tied to performance. They use base salary, annual cash incentives, long-term stock grants, and other benefits. For 2024, executive bonuses were tied to net sales, adjusted operating income, and cost savings from their TAG initiative. It sounds like they are trying to align executive pay with the company's financial health and efficiency efforts. However, when you look at the actual fiscal year 2024 performance, the company only hit 63.9% of its overall payout goals. This means while executives were compensated well, the company did not fully meet the targets that would trigger the higher bonus payouts. This is a crucial point, are executives getting top dollar even when targets are missed? This table really puts the pay versus performance narrative under a microscope. In 2024, the total shareholder return for Fossil Group Incorporated was negative 106. This is a pretty brutal number, indicating investors lost a lot of money on their investment last year. Meanwhile, the company reported a net income loss of $106 million. The compensation figures for the NEOs in 2024 are in the millions, even with the company's significant losses and negative shareholder returns. For example, while the company lost over $100 million and shareholder value plummeted, Franco Fogliato's compensation actually paid was still substantial. This discrepancy between executive pay and company performance is a red flag for any investor. It raises questions about whether the compensation structure truly rewards success or simply ensures executives are well compensated, regardless of market realities. The filing also details severance packages. Mr. Boyer, Mr. Hart, and Mr. McKelvey had agreements that could provide them with up to 18 months of base salary, bonuses, and continued vesting of stock awards if they were terminated without cause. This is common practice to provide security, but it adds to the overall cost when executives depart. Looking at outstanding equity awards, it's clear that a significant portion of executive compensation is tied up in stock. For example, Franco Fogliato has 1500000 ARSIS and 1500000 SOS. Outstanding, the market value of these as of December 2024 was substantial. This means their future earnings are directly linked to the company's stock price performance. This is the say on pay vote. Stockholders are asked to give their opinion on the executive compensation. Given the results we just saw, significant losses, negative shareholder returns, and yet high executive compensation, it will be very interesting to see how shareholders vote here. The board will consider the outcome, but it is non-binding. They are also asking to ratify Deloitte CAMP Touch LLP as their independent auditors for the upcoming fiscal year. This is pretty standard, and it is good practice for shareholders to have a say in who is checking the company's financial books. The fees for Deloitte CAMP Touch LLP for 2024 were over $3.1 million. This covers their audit work and also some other advisory services. It is a significant cost, but a necessary one for transparency and compliance. Opinion. So, what is my take on Fossil Group Incorporated based on this filing? Well, on the one hand, they are trying to bring in experienced leadership, as seen with Franco Fogliato and the board members with strong retail and finance backgrounds. They are also attempting to link executive pay to performance with various incentive plans. However, the financials paint a picture that is frankly quite concerning. A massive negative shareholder return in 2024, coupled with a substantial net loss, signals that the company is facing significant headwinds. The big question here is how executive compensation is structured. Even when the company is losing money and shareholder value is tanking, the top executives are still earning millions. While some of that is tied to long-term equity, the immediate impact for shareholders is negative. This disconnect needs to be addressed. The company's strategy around TAG and cost savings seems to be a focus, but if that is not translating into profitability or shareholder value, then the strategy itself might need a serious reevaluation. External context like the broader retail market struggles and competition from more agile brands definitely plays a role, but internal execution and compensation strategy are within the company's control. The risk is that if this trend continues, investor confidence will erode further, making it harder to raise capital or attract new investment. The opportunity lies in truly aligning executive incentives with sustainable profitability and shareholder returns. If they can turn the ship around and achieve consistent profitability while managing executive pay responsibly, there is potential for recovery. But right now, the numbers suggest a tough road ahead. Alright, that is our take on Fossil Group Incorporated's latest proxy statement. What do you think about the executive compensation and the company's direction based on these numbers? Let us know in the comments below if you found this analysis valuable. Please hit that like button and subscribe for more deep dives like this. And don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you next time.